Hey guys, what's up? It's Luke once again. Hope you guys are having wonderful holidays, Happy New Year, and Happy or Merry Christmas for those that celebrate it. Today, I just want to make a quick video to show you guys how we could have banked on Friday with both longs and shorts, catching the whole moves to the tick. All right, using nothing but the chart and the settings of the sweep strategy. Right, so nothing extra, but of course, I'm going to show you the extra because being extra is always nice. Alright, just give me a sec. I don't like this crosshair, so yep, that's better. Alright, so in the morning, what did we do? We stopped previous session low in London. I executed on this trade for 500 and I got out. We stopped previous session low. Step 2, Josh, very nice. Step 3, do you have an FEG? Yes, we have an FEG right there. You can enter on there. You can enter right there on it. One contract in the middle, another contract. You'll see price respecting it to the tick. I'm just gonna give the worst scenario on entering just at the start of the FEG, stop loss at the low, and you target previous session high, and that would have given you 4 or 5 RR respectively, risking literally nothing to making almost 5 times what you risked, right? Now, were you able to catch this whole move? Yes, you can. How? Well, you look. From the Josh, this is the Josh, this is the swing low, this is the swing high. You can cast your position, you can take a partial here, another partial at 1. At 2 to 2.5, you want to be closing all your position. At 2 to 2.5, did we see an immediate resistance, rejection? No, we didn't. So what do we do? Hold on, what do we do? Then we'll see the reaction here. So we had a bullish momentum, candle from the nodal block, price went up. In one single candle, we closed above the 2.5. This means that the price is unlikely to go down, right? It means it's going to go to 4. So you can hold your position till 4, right? So you might be in one contract left and you check it there. If we get immediate rejection, you will close your trade. If not, then you can hold it till 4 and you could be able to go all the way to 4. And of course, it went to 5, I think up to 5 standard deviations. We can check in a second, but most likely 4 is more than enough. This would have gave you 16 RR, literally risking about $50 to make in about 1,300 bucks. Easy peasy peasy. Alright, let me just check the 5 because I haven't checked it actually. I'm quite curious. So you can see it came back to 5. Notice how the wicks all respecting it, and just like that you would have been able to catch it, right? So so the way you do this is after you get 4, if we still get bullish momentum, it means it's gonna go to the next one, right? But by this time I think the majority of you will be closing the trade, right? I mean, you should be. You're making 16 trade, like 16 RR trade, which is crazy. Anyway, suppose you missed this trade in the morning, or suppose you did take the trade. Well, awesome, good stuff for you. Now what did we do? We supreme session high, we met all the way up, we came back, we formed a chosh right there, So this is the FEG, sweep, chosh, FEG. It's a bit mitigated, but it's right there. You can draw it out. So you'd enter anywhere inside of this FEG, for example, right there. Put stop loss at near swing high, this one or this one. For the sake I teach you is you put it all at the top, and then you can target previous session low, and just like that you can make 2.4 trades, 2.5 RR once again, and then the market can you had a little bit of drawdown, and then eventually you were able to catch this whole move, and during your long you will be able to catch this whole long as well. I'm sorry, some guy just putting some music on like an idiot. Anyway, but were you able to catch this whole move? Well, let's have a look. Swing high before the chosh, swing low after the chosh, 2 standard deviations here, 1 standard deviations here. Price came back, took out London to the tick, and went up. But you can see how all the bodies respected right here. Can you see it? All the bodies closed exactly at 1. You see? This is algorithmic. From here, we're bullish, so you can take this is kind of a turtle sweep, so sweep previous session low back into this FEG as well. You can see we have an FEG 5 minute, I don't care, it's still strong, and you would have catched this another move up, so you could have had a long, a short, and a quick long. This is not part of the strategy, this is something I teach in my other videos, which is called parachute. But anyway, this trade here was very nice. So why? Because we have a fair value up here, we have Josh, we have sweep, Josh, FEG, but we also have a breaker. So high, higher high, lower low. This lowest red candle becomes a breaker block, so you can see price. This lowest red candle becomes an order block. You can see that price came back into the breaker block to the midpoint of it. If I would draw the Fibonacci of this from here to here, you can see that it came back to the tick to the midpoint of this. So if you start incorporating this. So if you have a CHOSH, you have a FPG, you can be sure that you might not get stopped out. Why? Because we have this FPG that should support the price. We have this breaker block which should support the price. We have also this FPG that should support the price, right? You can see it came back to the tick, and then you would have able to catch this whole move down. So what you would have done is you'd have probably entered the position here, have stop loss just above this breaker, because if you break through this breaker and maybe this there, then you can be stopped out already. You can close your position already, or you can enter one at the FPG, and another one at the breaker, another one at the middle of the breaker. So you have into 3 contracts, and you can catch this whole move down, right? You can see price went down, now respected this bearish CHOSH after taking the liquidity. Now it came back, respected the midpoint of this breaker, this bullish FPG. So bearish one midpoint right there, bullish one midpoint right there. So this shows you that why is this doing it? Because we're at equilibrium. So both traders, longers and shorters, are satisfied with the trade. So you can see we're at equilibrium of this whole range. So both are content. So you're gonna see both of them, both sides be respected. This, the shorters and the longers, right? Just like that. So this is where you should be trading, right? This is where if you open your chart and you see this, well, the market just closed, but still, you shouldn't be trading here. You should be trading here and here, respectively. All right. So have a good rest of the week and have a weekend and blah blah blah, holidays, and I see you all next year. All right. Have a good day. See you guys. Bye bye, and girls.